So it's been a while since I made a trade recap, and this month I actually finished just under 20%. The trades that I'm going to show you, I'm not going to go through every single one because again, it's going to take quite a bit of time and I want to keep this trade recap very straight to the point. There will be a time and a place for me to go through every single trade. There's only 15 trades. I say that as if 15 is not a lot. 15 is quite out of my normal trade frequency, which happens to be about 8 to 12. I don't really judge trade frequency as a measurement that is important, but just so you know, my average trade frequency doesn't really go over 8 to 12 most of the time. It is usually a month in which people think there's not really that much opportunity, which personally I don't understand. You know, you'll hear traders talk about on YouTube, August and December and January are bad months. I don't know why those months particularly, but people have labeled months as bad months to trade. There isn't any such thing as a bad month to trade, right? You should stop looking at the markets that way. It's not the correct way to look at the markets or the correct mindset to have when it comes to looking at the markets, because guess what? If you approach the markets thinking, oh, well, it's a bad month. And the thing with that is a lot of people won't get it when I'm saying that. And I hope that you do. And I hope that you really see the depth behind it, because no trader should come into the markets with the preconceived notion of, oh, it's a bad day or it's a bad month or a bad week, just because other traders are saying it. So these trades that I've got on screen, they're not really in order. I'll try start with the first one, which is I believe on gold over here. So this, by the way, I've not actually added this before people come in and critique and say that I've just added the arrow tools on. This is from TradeZella. So I track all of my trades on TradeZella. I'm not affiliated at all or anything like that. Just find it a brilliant software to use when it comes to tracking positions. So on there, it shows my actual exit and entry price. So this is my first trade of the month on gold. And as you can see here, I'd executed on this candle. Okay, we had a scoop, we had a break of a daily area value. We'd come back in, but beneath this range before anything can shift and turn around. So it formed this little continuation. We'd stalled at this area. The first candle over here isn't really strong for my liking, so we had a follow through. Yes, we ended on a wick, but I mean, at this point, it's more than enough for me. So I executed over here. I could have actually stayed in, but spreads just took me out by like a pip or so. And then obviously it carried on in my favor. I could have break even the trade or probably got off a 1% profit, but it is what it is. Can't really hold it too much personally. It's easier to say not to hold these things personally, but they happen and they're a test, and how you react is going to determine how profitable you are as a trader. That's what you get paid for by the market ultimately, is how good your reaction is. If you have a bad reaction, the market's going to take money from you time and time again. And if you have a good reaction, it's going to give you money over and over again. Second trade, let me find where the second trade is over here. So the second trade, okay, here it is on the DAX. So trade number 2, this, you can't see it, but it broke an area of value. We come back in, we had a little pullback into this little range here on the left. We then dropped through. We had this little low to the left that you can see, 1, 2, and 3. Stunning little candle there that you can see there. We've broken past this area. And I want you, while you're watching this as well, this obviously is applicable to those of you who don't trade the same way that I do. Think about how many of these areas, forget the asset that I'm trading over here, think about just price action as a whole, how many areas you would have got caught out in for a loss for no reason. You know, would you have got caught out in here? Would you have been trying to sell it up here? What kind of candles are you looking for? If you're looking for the wrong type of candles, you're looking for the wrong type of positioning in the market. Where are your trades positioned? You know, what kind of price action are they coming from? Not just the actual trade itself, but what's it surrounded by. If you're not looking at these things, then you're a feather in the wind, and you know, you can get blown whatever direction the market goes. What happens here? I execute the trade, a little bit of profit, no room to break even, then it obviously tags me out and it drops, doesn't commit in the end, is what it is. Simple trade, something I take over and over again. Trade number 3. Now this is really where it started to, I'm not going to say test me, but it was about to test me at this stage. In the past it definitely would have, and I think a newer trader would have 1,000,000% been tested in this scenario emotionally. So after these trades that you've just seen, this EuroCAD position shaped up. So I took the trade. This was in the 5-minute. So we had a 1, 2, 3 prior to this. Very nice structure leading into it. Broke this little range so it can't turn into anything else, i.e. lowering the room for error. We then broke below, and you can't really see it, but we have a section 1, section 2, and section 3. 2 weak of a candle at the top, so I waited for the follow through, which we got, executed right here. And then what happened is, as price was pushing down here, I moved to break even because there was high impact news coming, right? So I didn't want to hold through the news. On my personal account, I'm fine. I don't really bother with high impact news. I don't think you should on your own money, because at the end of the day, your risk exposure is a lot larger on your personal account than it is on your prop account, which is limited to 5 or 10% max risk exposure. So you've got less to play with. So I moved it to break even, and my stops were about here. Spreads widened and just took me out. Well, as it just took me out, it dropped through. What I could have actually done, so if I just go back to the DAX position over here, because I had both of these open, I believe, at the same time. I was running in a little bit of profit at this stage, and this was obviously news. I was running in a little bit of profit at this stage. What I could have actually done is just bagged the profit here, closed it, because I didn't really have any room to move it to break even, like I said. So this little buffer that I've got over here, this is really important. This small little buffer that I've got, call it like 0.2, 0.3%. I could have just walked away with that profit, wouldn't have held through news. I didn't think this kind of news at this point, by the way, would affect the DAX. And luckily as well, the slippage that I took was really, really small. It was like extra 0.1. So I was risking 0.5 on this. I got taken over 0.6, as you can see just above. I could have taken that small little profit and used that as a buffer to just move my stops a little bit higher, because the trade idea was still correct. It's just that I didn't think of the fact that the spreads could widen. It didn't cross my mind in the moment. It's a silly schoolboy error. It happens. It doesn't matter how long you've been trading. This is proof you can get caught out. And that small little profit from the DAX could have acted as a buffer for me to move my stop from break even here to slight negative, but I still would have been net profit or break even as a whole, and I wouldn't have taken a loss, right? Because that would have covered it. And I would have been out of that. I should have been out of that trade on the DAX anyway because of the news. So this is my point about thinking ahead. Sometimes you can't do it, sometimes it doesn't happen, and then you pay the price. So I took a loss, 0.6% on the DAX, took a break even on this where I could have actually netted about 10%. So this could have been a 30+% month. You make the mistake, as long as it's not repetitive, that's the main thing. As long as it doesn't affect you negatively, that is the main thing. Then I took another loss on EuroCAD. So as of now, I actually should be up 10%. So this is another important tip of how I navigate any kind of drawdown or when I'm taking back-to-back losses or whatever it might be. The reason I'm able to recover that so easily with so much tranquility is because of the way that I think in this process. So right now, I'm not telling myself that I've taken 2 or 3 losses. All I'm telling myself is I'm actually up 10%. So think as if I'm up 10% because I should be at this point. So measuring your peak performance versus your actual performance. Again, textbook trade, tagged in, tagged out is what it is. What can I do? Where's trade number 5? Trade number 5 on gold, 6% winner, okay? So I didn't take the trade over here because again, it can develop into a lot of things, but if my risk exposure was there and I was in profit, I would actually take this trade as a limit order, as a sell over here, and I could have used this as a scale-in. I would have got out in total for this for about 12, 13%, got out for 6 in the end, entry over here, exit over here. Lovely psychology with this trade as well, by the way. I'm not gonna go too deep into this psychology, this trade. I'll touch on it actually. So we've had this area, which is more important than here. Why? Because we've actually had more volume than we've had here. Overall, this is where this actual sell move originated from. Then we can see it's broken above this high. First continuation, we've retested the back end of that with another continuation structure. We've broken out ever so slightly, but this retrace isn't the one that got me involved. It's this next candle. Because usually what my rule is in my criteria, that if price breaks and closes out of a structure, that I don't take the entry over here. I wait for a follow through and then a continuation beneath here. But the only reason I fear a break and a close out is in case price follows through. In this case, goes to the upside. And you can see we've almost got 1, 2, 3. This is taking the position of a bull flag to go up. But what mitigates that is this next candle, because it tried to go up, as you can see on the right, but then it failed, and then it closed as a strong high test candle. That for me was a signal to get involved. This is the importance of understanding price psychology. So it closed back in, took the trade, and the management was really simple. Took a loss after that the day later. This was actually arguably a better setup than this one above, but it didn't work out. Very simple, tag in, tag out. Dollar yen, took this live with everyone on the webinar. This should have been a break even, but I managed it a bit more loosely. So I could have actually break evened around here. Again, it took me out over here that you can see on the right. And then straight after I re-entered again, I evolved the structure because it developed. Got tagged in here, tagged out there for about 1.6% profit. Trade number 9, pound CAD on a Friday. Oh, this was such a, when I say stunning trade, I mean the psychology of price action was beautiful. I don't care if this was a win or a loss, this trade as a whole, the context of it was so nice. Let me just show you. So I'm in this trade as well, by the way, at the moment on Kiwi Swiss. Let me just iron it out for the skeptics. Sell position, executed, as you can see. So I'm running profit on that at the moment. Forget the management and all that, I'll talk about that in another video when I recap this trade. Pound CAD, I've got it on watch here. So this trade, some lovely long positions as well. So the sell position was actually within here. As you can see, we'd formed these lovely continuations to the upside on the left. Stunning trades. I didn't take these. I didn't have it on watch at the time. But then we sold off. Large correction. That to me, that isn't really nice, but I can see this. So the mechanics of it is that usually we have this, right? And we say that there's 2 entry points, 3 actually. There's 1, price coming in, 2 at this high, and then there's 3. And there can be more, but I'll talk about that in a different video where we can scoop out, break the high and come back in. Then we can have this entry. But you get the point, right? That's a separate thing for a separate video. We haven't really met the top of the structure over here, as you can see. So we haven't really met the top of the structure, as you can see there, but we've come into this area, we've stalled, which is what? Volume accumulation. We've then sold off. So my initial thought process here was, right, if we've sold off, I want to see continuation beneath this, right? And the night before all this spike happened, this was just here. So I was waiting for this to come to this area so I could execute, but then obviously we broke out. Now I'm asking myself, where is price broke out to? If I look to the left, it's broken out into where the volume generated, as you can see on the left. Then we had a reaction to it, we had the correction, we had a break below, that's where we had the structure. So it's a really intricate trade. I've specified to the students as well, the guys in the Falcon community, that look like this isn't the kind of trade I want you to focus on when it comes to trying to build your profitability. I don't think this is going to be the one, but this is one of those trades where you have those small pockets to capitalize on these trades when they do appear that can make you a lot of profit if you execute them correctly. And this has got almost like for like the same candlestick formation to gold, as I said before. Really weak candle reaction here, but then when you look at this high test, all that high test shows to me, it's not a strong body, but what it shows to me is that this is failing to break out. It's tried to break out. There's too much bearish pressure over here. This obviously reacted to that. That strengthens this hanging man for me, because I don't normally execute on hanging mans. I think they're too weak of a candle to do so. And then obviously I executed over here, and the trade, again, was a massive trade. As you can see there, I got out right about here. There was CAD news around this time, so I'd already locked in about 3%. This was on a Friday, and then again, it just rocketed lower, and I closed manually over here for 9% profit. Trade number 10. So this looks a bit weird because this is on TradeZeller's price feed. I don't know what data feed they use or whatever, but on my trading view chart, this looked clean. This little candle wasn't here. It's just a simple two-touch continuation, executed here, tagged in, tagged out. Nothing else I can say. Lovely price psychology, broken the high, back in. Everything was there. Again, it moved in my direction, but it's just the way it moved in my direction. I wasn't able to capitalize on it. Then I took a trade on the DAX. Now a lot of people are going to look at this and think, Ibby, that's just a steep pullback, there's no correction there. Let me just show you. So if I go to the Germany 30, and the long position was over here. So on the 15-minute, you can see it a lot clearer. If I even flip the chart for you, this is that same trade. I was just showing you the 1 hour in the screenshot. If you have a look at this, this is ultimately what's formed. 1, 2, and then 3 out here.